Remember how we purchased Bitcoin on election night? It's not $68,000. It was a wise decision. Isn't that a lot? It's not a horrible move, yes. It's a significant move. Since November, that is a significant move. Additionally, there are other XRP, for example, has increased 5 times as much. It's 3 times higher for Dogecoin. Massive actions have therefore been taken in anticipation of all the positive developments. Humans are going to become human, in my opinion. We'll probably raise prices too much. We haven't topped, in my opinion. My personal opinion is that the peak of this cycle is between 150 and 180K Bitcoin, but you can figure it out for yourself. Additionally, that would be roughly 1.5 times fair value. Following the US election, the cryptocurrency market has continued to rise, and as a result, cryptocurrencies like Bitcoin, Dogecoin, and XRP have all seen notable gains. We're going to be today finding out when we will be far over the fair value of the cryptocurrencies in question, when the best moment to sell your crypto assets will be based on the fundamentals, and what each of us can do to get ready and ensure that we take advantage of this opportunity. Joining us will be Yusko, who will explain this and walk us through it. Please pay close attention and hit the like button so that everyone in the XRP and crypto army can watch the video. I think this is a really strong interview. Let's begin. I've been talking about this a lot lately, but none of us are really sure if he has the authority to create a strategic reserve of any kind of asset through executive order. To reiterate, I am not an expert on this, but it seems like Congress must approve it. In an effort to establish this strategic Bitcoin reserve, certain bills are being presented to various organizations, one headed by Senator Lummis and another by a senator whose name escapes me. These, however, are unique to Bitcoin. They don't relate to any other tokens. Trump's creation of a US-based cryptocurrency has been discussed. However, we are now discussing cryptocurrencies rather than Bitcoin. Although Bitcoin is a cryptocurrency, let's make a distinction. Profits from US-based cryptocurrencies are tax-free. Naturally, the Hedera, XRP, and Cardano folks were all present. That will be fantastic. And it might be fantastic, but why would he issue such an executive order? Why would he push for that regulation? Again, I'm not even sure whether that's within his jurisdiction. Well, if he and his family have started buying cryptocurrency assets out of the blue, it makes sense that he would support making those things more profitable, even if it isn't morally or ethically right. Is it accurate to say that the Cardano, XRP, and leadership, that is the majority of those token owners, have been actively lobbying Washington, not only Trump, but also the previous government, to obtain advantageous positions? You know, the XRP folks aim to replace SWIFT by using it as a basic layer in the financial system. And indeed, is there a world in which you may witness enough lobbying that is suggested by, I could see it, of course. Personally, I dislike it since I don't believe it to be decentralized. It's hardly the best response, in my opinion. Bitcoin, in my opinion, is the foundation upon which everything else should be built. This is a superior approach. However, to use a flowery way of putting it, I believe that a lot is going on. I don't think executive orders will do much. Even though it must follow the correct procedures, the rumors continue. As a company, we have always preferred the bigger, more well-known protocols. We have a lot of Bitcoin, you know. We have a very small amount of Ethereum. We sold most of that in the past, but we still possess a good amount of Solana. We are not the owners of Hedera, Cardano, or XRP, other than the fact that we haven't encountered many founding groups working on those platforms when we speak with them. That doesn't contain any information. I want to own XRP if someone were to say, yes, XRP is going to replace SWIFT, and Bank of America is going to use it, and JP Morgan is going to use it. If, that is capital I, capital F, if I can see a way that token holders could receive some of the revenue that would be saved by using a better, faster, and cheaper solution, yes, without a doubt. As you are aware, Paul, the issue with the majority of these utility tokens is that they do not receive any cash flows. Speculation without stock ownership, a claim on cash flows, or debt was the crux of the entire initial coin offering issue. I'm a traditional investment man. Owning cash flows appeals to me. I enjoy having valuable possessions. I would own it if there were other token networks that could be used globally, and the cash flow somehow went to token holders. Therefore, there is little doubt that any modification to the regulations, including those pertaining to accounting, that would permit banks to own these assets would have a negative impact on their capital base under the current accounting standards. This also applies to risky assets. Due to certain accounting regulations, such as mark-to-market regulations, they don't engage in a lot of venture capital or private investments. Therefore, it is obvious that supply and demand would shift if those regulations were altered or if specific assets like cash or other assets were made acceptable as depository investments. Once more, if banks are only trading assets, it isn't all that different from trading on Coinbase, Kraken, or Gemini, is it? You are simply taking a spread in a transactional business. Would there be a profit? And if a bank could, arm the spread on cryptocurrency, would its value increase? Yes. Who will set the regulations is one of the problems with all of this. Who will choose which of these suggestions we adopt? Will the person who pays lobbyists the most get what they want, as was the case in the bad old days? Hey, let's assess all the technologies versus let's approach the world as a corporation would. Therefore, it would be fantastic if we truly evaluated Web3 and blockchain technology and included it into the financial services system instead of a pay-to-pay model. Apart from the fact that it is not prudent to invest in a cryptocurrency asset if there isn't cash flow going into it, I agree with a lot of what Mark Yusko is stating here. The fact that Ripple does in fact create products and services that do provide cash flow is something I don't think Mark Yusko is particularly aware of, most likely because he hasn't done much research into the XRP ecosystem. That's okay though, because he's still learning. You might therefore consider investing in XRP to be an investment in Ripple as well, as they are providing he raises the question of how the cryptocurrency XRP's owners receive their money back. Well, Mark, give it a moment. It's a cryptocurrency. The asset's value increases with the amount of money moving across the XRP ledger. In other words, the value of XRP will increase dramatically if more transactions occur, and XRP is in charge of ensuring that they do so, such as if it takes the role of Swift, as he mentioned. Additionally, if more and more developers build on top of the XRP ledger to create systems that people can utilize and profit from, such as Layer 2 developments, blockchains, DEXs, and the like, those developers will also profit. As a result, Mark, the best way to profit from a